As you can see, time is around 9:54. Let's look into gold trade analysis, guys. On Friday, the Friday as well as Monday trade. So my previous video where I have mentioned to you, if you go and see here, guys, what you can see here is that I have explained you on 23rd and 24th gold trade analysis. Just watch it before. You can see, guys, the market sweeping. This is this price action where I have told you that the market here swept this liquidity above here and closed within this range here. This is a clear buy side liquidity. So if you look into a smaller time frame here, guys, after sweeping this liquidity over here, what I mentioned to you is that the market clearly broke this supports over here, clearly indicating bearishness, or you can see the chalk formation. What you can see is that the market here showed some kind of bullish momentum, higher low, higher high, higher low, and the market failed to make an higher high here. Instead, the market made a higher low and made a lower low, guys. Here you can see this momentum after sweeping this buy side liquidity, where the market formed a chalk over here, clearly changed the market sentiment here from being bullish to bearish, guys. So let's see that video. I told you now, guys, in a 15 minutes time frame, this is the price action which I told you. And there is a high probability that the market might continue bearish like this. So what you could have targeted is the next liquidity levels. Here there is another liquidity. Here there is another liquidity. So you could have clearly marked your sell side, like this is your sell side liquidity over here. So you could have marked this liquidity and targeted this level as well, but this level has not yet reached. So this is one sell side liquidity. And there is another sell side liquidity over here, sell side liquidity over here. But let's look into a daily time frame and analyze. After that, let's look into a smaller time frame and analyze the trade analysis, guys. So what happened in previous week is that you can see the market here sweeping the high of this candle. You can see the market swept and closed within this range, guys, clearly signifying bearishness. So what I told is to look for the next down candle over here, the low next to low, and the market here broke that low and came all the way to this low as well. But you can see the market swept this low and closed within this range, clearly signifying some sort of bullishness. So what you could have targeted is that you could have targeted the high of this candle over here for the next day. But what happened for another 3 to 4 days, you can see the market is consolidating in a sideways manner, guys. So between these ranges, you can see here there is one buy side liquidity, and here there is sell side liquidity. And within this range, let me explain what happened on Thursday, Friday, Monday, as well as today, Tuesday. So you can see the market here trading within this range. So here, all these candles are insider candles, guys. But you can see the market swept this low. So what you can plot is that the high of this candle to the low of this candle. You can see the market trading below the 0.38 level over here, clearly indicating bearishness, guys. So 0.38 level, clearly indicating bearishness. So in case the market sweeps this liquidity above this candle and closes within this range, or you can see the market here closing, trading below the 0.38 level, you can see this weak rejection over here, clearly indicating bearishness. So there is high probability the market might sweep this, or instead the market might continue further bearish towards the downside and target this liquidity over here or this liquidity as well. Or you can expect the market to reject price from these levels, or you can expect a wick over here, rejecting price from these levels and continuing further bearish. But you can see the 0.38 level clearly showing some sort of confluence that the market is bearish only. But let's me explain on Thursday, Friday, and Saturday as well. Thursday, Friday, Monday, and Tuesday, guys. You can see there is market is trading between this range. You can see this is a consolidation. But if you can see here, the market with this previous candles low here and closed within this range, and the market formed an insider candle. And the next day, you can see on Friday, guys, the market swept the buy side liquidity. And what I have told here is that once the market rejected price from these higher levels, the buy side liquidity, this is where I told to enter short position, guys. So if you look into a shorter time frame, I told you this buy side liquidity over here, this buy side liquidity, guys, in a smaller time frame. So I told you once that market swept here and the market here formed a chalk over here. This is where I have mentioned to you, you should always look for downward position. So there's high probability the market might continue bearish. But you can see, according to price action, if you consider, see the market clearly showed some kind of bullish momentum, and you can expect this to be a retracement. And further, you could have expected the market to go further bullish, guys. This is how the price action behaves. But you can see how the market manipulated all those buyers who might have entered after seeing this kind of huge momentum. So if you look into a higher time frame and see here, you can see there was a very good momentum towards the upside, breaking the structure over here as well. You can see a clear break of structure as well, which you can see here. But I have told you in my 15 in my previous trade analysis that this is a breakout structure. In my previous trade analysis, even though the market sentiment here is showing some sort of bullishness, you should always look for liquidity, guys. Market runs in search of liquidity. Wherever the market finds liquidity, that's where the market tries to go. And there is no liquidity over here, guys. You can see here the fair value gap has been mitigated. The market swept this liquidity and closed within this range and formed a chop towards the downside. So in case after this chop formation, guys, what you could have done is to plot the optimum trade entry zone, the common point between this to the common point between this. You can see exactly at this levels where the market rejected price from these levels. This is the optimum trade entry zone. The 0.70 and 0.78 is the optimum trade entry zone, guys. So you can see the price formed a chalk over here, or you can see here there is no clear chalk formation, guys. But definitely, what you can see here is that in a smaller time frame, guys, like if you look into a 1 minute time frame and see whether the market here formed a chalk or what, you can see this is the up candle, down candle, broke a structure towards the upside and rejected. You can see this is definitely a chalk formation, guys. But if you might have not taken your position here, you could have waited for another break of structure of this swing low here. This is another break of structure. You can see the market clearly broke structure towards the downside here. And you can see after this, the momentum which clearly broke structure was this high of this candle to the common point between this. You can see, or you can consider this candle over here. You can see the market came all the way to this 550 levels over here. Rejected price from this 550 levels. This is the 550 level, guys. Your price rejected over here. So you could have why you couldn't expect the market to come all the way to the optimum trade entry zone. There might be people asking, you could have expected the market, but here there is no fair value gaps, guys. You can see here there is a fair value gap over here where the market came and mitigated this fair value gap, but there is no fair value gap. When there is no fair value gap and the market coming and mitigating this level indicates the market might continue further bullish. But whenever you find that there is no point of price coming all the way to these levels, and you can see this kind of rejection candles, either you could have entered your short position here or here. Let's try to plot the fib extinction levels. Or what you could have done is that in case if you consider this momentum towards the upside is the low of this candle, to the high of this candle. Once if this 0.5 levels has been broken towards the downside, this is the 0.5 levels where you could have expected with a proper confirmation and a one candle of stop loss is where you could have entered. Here also one candle of stop loss. But let's try to plot the day VWAP level. You can see this is the day VWAP level. You can see this rejection of price from 50 levels and my market closing within this candles range, clearly signifying bearish momentum. Guys, you can see this kind of rejection and market is closing within this range. So there is a lot of confluence why you could have taken short position, guys. I hope you're understanding, or you could have taken your position here itself, but let's not consider this is only for confluence, guys. So let's plot the fib extinction here, the common point between this to the common point between this to the common point between this. So you could have targeted the liquidity. This is the liquidity where you could have targeted. This is the sell side liquidity, and below this candle there is a lot of void over here. So you could have targeted it all the way to 4 points. So I hope your understanding is this is where you could have targeted according to February retracement levels. You could have targeted the 4.26 level, or you can see this equal low liquidity over here, or this liquidity over here. You can see the market came but failed to sweep this low, guys. But I would be explaining to you further this momentum. So there is swing lows over here, swing lows over here, swing lows over here, swing lows over here as well. So the market came and mitigated all the way to these levels over here. So according to Fib extinction level, this is where you could have targeted, guys. Or in case if you try to plot the Fib extinction of this momentum over here, the common point between this to the common point between this to the common point between this. So here you could have to see here also the market came all the way to this 4.26 level only, guys. I think both are almost same here. So either you could have entered your short position here, guys, giving your stop loss just above that candle itself and targeting it all the way to 4.26 level over here. This was one momentum which I have already mentioned to you in my previous trade analysis. If you go watch it, the full video, guys, I have clearly explained the market might continue bearish, guys. So this is how the momentum here. So this is how you could have traded. And let's see if you could have added on to your position as well. So you can see after the market break this level over here, the sell side liquidity over here, you can see the market aggressively broke this sell side liquidity And if you consider this momentum candle over here, the last up candle over here, you can see the market came and retested these levels and continued further. So you could have acted as breaker block over here. This you could have considered as a breaker block as the market breaking these levels, retesting, or for better confluence, you could have plotted the fib levels over here, the high of this candle to the low of this candle. You can see price retracing to this 50 levels or the optimum trade levels over here. If you consider the common point, so the price almost coming to this levels over here. You can see this fair value gap where the market mitigated and continued further. So 50 levels was one confluence, or if you consider this single momentum is better to consider because the market here didn't show any retracement over here. So in case if you consider retracement, the market should retrace at least to 0.38 level over here. So this is not considered as a retracement, guys. So what we need to consider is this will full swing over here. So you can see the market rejecting from 0.38 level, clearly indicating bearishness and the breaker block levels in confluence. So in case if you try to plot the fib extension levels between these levels over here, the count point between this to the count point between this, you can see the market couldn't cross this 100% move, but definitely you could have entered your position guys based on risk to reward ratio and targeting all the way to 4.26 level. But let's consider this momentum and see the market came all the way to this level, guys. So after this market sweeping, this sell side liquidity over here as well. You can see here there is another sell side liquidity. Sell side liquidity is what is sell side liquidity? Sell side liquidity, in case if you consider guys, what is either there are option retail buyers as well as sellers entering the market. Whenever they see some kind of support over here, either people who might enter break out of this trade over here. Once the market level has been broken out, the market will trigger the sell orders, sell stops. And in case the market over here, people who are trying to take long position over here, expecting the support over here, may put the sell stops over here. So stop orders over here. So either the sell stops or stop orders anywhere between these levels, there will be a lot of liquidity pool over here. That's why the market will sweep these liquidities and continue further. I'll be explaining you about the buy side and sell side liquidity further clearly, guys. But let's keep that in mind and just analyze. But in sell side liquidity, there will be a lot of sell stops and sell orders. And in buy side liquidity, there is a lot of buy stops and buy orders over here. Buy orders for option sellers and sell stops for option buyers, guys. So same as in sell side liquidity as well. So you can see the breaker block level, the market retraced and the 0.38 level price rejection here, which I have already mentioned to you. Market came and rejected price from these levels and continued further selling towards the downside. You could have targeted it all the way to this level. So this is another sell side liquidity. What I expected is that the market might sweep this low also, guys, but here the market failed to sweep this low. Again, I expected the market again to come and sweep this low, but you can see the market here failed to make multiple lows over here. These all are failure swings, guys. So there is a high probability the market might break all these swings lows over here. Swing. But what you can see here is that the market here showed some kind of huge aggressive momentum towards the upside with a very good fair value gap over here. You can see the market showed a very good fair value gap, but let's look into a smaller time frame and analyze that momentum, what happened over here, guys. So what happened is that you can see clearly the market here showed some kind of aggressive momentum towards the upside. Whenever the market sweeps liquidity and shows some aggressive momentum towards the downside, and immediately sweeping this liquidity, the sell side liquidity and aggressive momentum towards the upside clearly indicates some sort of demand. And you can see clearly the market broke this structure over here in a smaller time frames, a chalk formation. And what you need to mention is that if you consider the premium and discount zones, guys, so if you consider the common point in this to the high of this candle, you can see this is the zone below is the discount zone and the zone above is the premium zone. So what we need to see is that any fair value gaps in the discount zone is in this is the discount zone and there is only one fair value gap over here. And you can see clearly the market coming and mitigating this fair value gap. Or what you could have done is in a smaller time frame, guys, in a higher time frame, you can see the market can be mitigated. So if you consider the common point between this to the common point between this, you can see the price retracing to optimum trade entry zone over here. Either you could have taken your position at this optimum trade entry and the market showing some sort of bullish momentum, fair value gap over here, and the market retracing back to this optimum trade entry zone or the fair value gap. For pinpoint entries, definitely you could have used this fair value gaps over here. And what you could have considered is to consider this retracement level, guys. Once if this retracement levels of 50 levels has been broken towards the upside, So if you consider the high to low of this candle, one thing what you can see is the market clearly broke structure towards the upside. So you can consider this to be a clear break of structure even in a 5 minute time frame. And what you can see as this order block level here, guys, the last up candle, which acted as a breaker block over here, or you can see clearly the market formed a PD array where the market came, broke towards the upside, took support, and continued further bullish momentum. So this level is where you could have taken long position over here, keeping your stop loss just below that candle. Or for better, you can see there is one confluence over here, is this rejection of price from this fair value gaps and rejection of price from optimum trade entry. So if you try to plot the fib levels, the market clearly broke structure towards the upside. So you could have waited for retracement. So let's look into a smaller time frames. I hope you're understanding that's what I'm saying. I think there is no one in YouTube channel who explains to you in this way, guys. I so what we need to see is, since this breaker block level was too large, guys, so I just wanted to simplify it and just make it as small as possible. So you can see the market came, retested this breaker block level. So in case if you try to plot even the anchor VWAP level, you can see anywhere along this level. So you can see the market taking support over here. And here is where you could have entered, keeping these breakup block levels in position, entering long position guys, keeping your stop loss just below that 250 levels or below the VWAP level over here. And in a 5 minute time frame, this is how you could have entered. And you could have either plotted the fib extinction levels of this momentum. So if you consider this swing momentum over here, the common point between this to the common point between this. So let's see in case of the market retraced to 0.38 level. So the market didn't retrace to 0.38 level. You can consider this to be a single swing. But what we need to see here is that since these are failure swings, guys, definitely you could expect the market to mitigate these levels. You can see this is a failure swing over here as well. So all these levels could have been mitigated. So if you consider this momentum towards the downside, so in a high time frame, what you can see, this was the last up candle which broke structure towards the downside. So if you consider this momentum, you could have plotted the fair value gaps over here. You can see there is a fair value gap over here where price has not yet been mitigated. Or in case if you consider the common point in this to the common point in this, so you could have plotted the optimum trade entry zone over here. You can see exactly at this optimum trade entry zone, the market came, rejected price from these levels and continued further bearish. So you can see guys the fair value gap in a higher time frame as well as the optimum trade entry zone if you consider this swing momentum, so or let's consider the fib extinction levels here. If you consider this momentum over here, if you try to plot the fib extinction levels over here, the common point between this to the common point between this to the common point between this. So what you could have targeted is this liquidity over here, the 2.68 level, or you could have targeted all the way to this optimum trade entry points. So definitely the mid of this optimum trade entry zone, you can see exactly to the mid of this optimum trade entry. So you could have targeted. So I hope you understand guys what I'm saying. This is how you could have traded your position guys in a larger time frame. So I hope you can see again the market rejected price from these levels and formed a chalk over here. You can see an aggressive momentum towards the downside, a chalk over here, or you can consider the market structure shift. So after this, the market retraced to this level. So if you consider this is on next day, guys, this is on Monday. So let me explain trade analysis on Monday as well. So if you try to plot the VWAP levels on Monday, let's try to take this VWAP levels on previous days over here. And what you can see here is that the market in a smaller time frame is, let's see, in a smaller time frame, the market reached to optimum trade entry zone. And you can see this kind of bullish momentum towards the upside, where the market showed some kind of retracement, reached all the way to this optimum, but continued further bearish. So here in a smaller time frame, this is the chalk entry, and this was another chalk. This was where another swing which broke structure towards the downside. So let's look into higher time frame analysis, guys. Let's you can see there is a lot of entry where you could have taken. That's why I thought of like mentioning you in a smaller time frame. What I was thinking is that you can see there is an order block level here. This is the last up candle, guys, where the market came and broke structure towards the downside. You can see a market came mitigated this order block. So this was 1 minute order block where I wanted to mention to you. And why the market over here came and mitigated this order block is that you can see there is an inducement levels over here. And above these inducement levels, guys, there is a fair value gap where the market has not yet mitigated. So here there is a fair value gap where the market failed to mitigate. So you could have expected the market to come and mitigate this fair value gap, guys. So you can see after mitigation of this fair value gap, what we can consider see is that the market clearly broke structure towards the downside. I'm not asking you to take positions over here, guys. What I'm asking you is to wait for a confirmation, and in a smaller time frames, like 1 minute time frame, after the market came mitigated these levels, or what you could have waited for a chalk formation over here. You can see clearly the market here formed a chalk over here after the market showed some kind of bullish sentiment. And if you try to plot the common point within this to the high of this candle to the low of this candle, guys, you can see the market so let's consider the swing momentum over here. So the market retraced to 550 levels over here. This is the 550 level, guys. Or you can consider the market retracing back to this fair value gap. Or I think best like to consider this fair value gap only, guys. So you can see there is a fair value gap where the market clearly broke structure. So let's keep it simple. And in case if you try to plot the fib extinction levels over here, the common point in this, to the common point in this, to the common point in this, short position just here, guys, keeping your stop loss just above this fair value gap itself and targeting it all the way towards the downside. So you can see, guys, the market came all the way to 3.6 levels, and you can see you could have targeted it all the way to 4.26 level as well. So this was one another trade opportunity where you could have traded and looked for short setups over here. Or for liquidity levels, what you could have considered is the swing over low over here, where you can see the sell side liquidity, or this low over here. So it's better to consider this low over here, where you could have expected another sell side liquidity here, where the price took support over here. So you can see exactly here the market came and rejected. This is the sell side liquidity, but you could have expected the market to continue further bearish, guys. But what we need to see is aggressive pullback over here. After this kind of aggressive momentum, if you try to spot the aggressive pullback, that's where you should be always very vigilant about how the market behaves. So you got it, you got it, guys. Why I have taken this position over here, the short entry here, mitigated as order block after confirmation, price retesting this fair value gap, keeping a stop loss just not even a single candle stop loss, guys. You could have traded it all the way to this towards the downside. You can see how I'm explaining you the best trade examples, guys. I think there is no one in YouTube channel and who explains you in this way, guys. And you can see aggressive momentum followed by aggressive pullback, guys. Clearly, the market here broke structure towards the upside over here. You can see clear break of structure towards the upside, or you can consider this to be a market structure shift or a chalk formation, guys. The initial break of structure is considered to be a chalk. So here there is was fair value gap. You can see in a 5 minute time frame only. There is a fair value gap over here. The market mitigated this fair value gap. Let's look into a smaller time frame analyze, see how the aggressive pullback had happened. You can see the market here showed some kind of momentum towards the upside where the market clearly formed a chop over here. So again, if you consider this same impulsive momentum, which when compared to this momentum, even though market formed a choke, guys, this aggressive this aggressive momentum towards the downside is very strong. So what you could have plotted is that to plot the fib levels over here, the common point between this to the common point between this. So you can see the market came all the way to this fair value gap over here. There is a fair value gap here, guys. The price failed to mitigate this fair value gap. So you could expect the market coming all the way to this fair value gap also. But what you need to see is that below that fair value gap, there is another fair value gap over here where the market came and mitigated this fair value gap over here. So you could have plotted these two fair value gaps, guys. And what you could have expected is to wait for a chalk formation after mitigating this fair value gap. You can see here the market here facing rejection from this 200 moving average over here. You can see this multiple rejection, and even after this rejection, you can see a clear break of structure here, guys. A break of structure towards the downside after the market rejecting price from these levels and clearly indicating bearishness. So after this break of structure, what you could have done is to plot the fib extinction fib levels over here, the high of this candle to the low of this candle. Let's look into a smaller time frame since the wick is too large, guys. So let's look into a smaller time frame and see. So let's consider the common point between this to the common point between this. So what if you can see here is that in a smaller time frame, there is optimum trade entry zone over here. As you can see exactly where the market came towards the optimum trade entry zone over here. The market failed to cross above these levels, guys, and further showed some kind of momentum towards the downside, clearly breaking these levels over here in a smaller time frame. I hope you're understanding. Either after this retest is where you could have entered short position, guys, keeping your stop loss just above that candle itself or above this wick over here. So if you look into a smaller time frame, you could have plotted these mid of this wick, guys. So in case if you consider this rejection candle, so this is you could have used that wick, guys, instead of having a wider stop loss and plotting the fib extinction levels here, the high of this candle to the low of this candle to this candle over here. So you could have targeted it all the way to 1.6 level over here. This is the where you could have targeted as, or you could have expected further momentum, guys, or you could have just tried your stop losses based upon momentum. See short position here, guys. So I already plotted it. So you could have targeted this fair value gap, or you could have expected this sell side liquidity also. But the market failed to reach this sell side liquidity, guys. So the market here took support and clearly broke structure here, forming a chalk over here. So this aggressive pullback clearly changing the market structure from being bearish to bullish. So either you could have tile your stop loss here or above here, guys, after seeing this kind of momentum towards the downside. And you could have expected the market to come here, but here the market failed. So what I've expected is that the market would definitely come to here, guys, the major swing low over here. So the market here didn't reach and it came all the way to 1.68 level. That's why whenever you find a good opportunity to enter, guys, trial your stop losses and based upon risk to reward ratio is where you need to trade, guys. So even though the market here, you could have just trial your stop loss, but you can see this momentum change the whole sentiment and market clearly broke structure towards the upside. But what we need to remember is that there is a fair value gap over here where the market has to come mitigate this fair value gap. So there is a lot of confluence, guys. So if you consider this swing momentum towards the upside as well, so if you consider the common point between this to the common point between this, you could have marked the optimum trade entry zone over here. You can see the market came rejected from this optimum trade entry, but let's not consider that, guys. Since there is no proper fair value, since there is a fair value gap over here, you could have expected the market to mitigate this fair value gap as well. So after this momentum, guys, the market here consolidated. So even this consolidation, if you consider the common point between this to the common point between this, the market rejected from 0.38 level, clearly indicating some sort of bullishness, guys. Or what you could have plotted is the breaker block level. This is the 0.38 level where price rejected. Or what you can consider is this candle over here is, you can see the market over here came all the way. So if you consider the mid of this candle, is where you could have considered. And instead, this is the last up candle which broke structure towards the downside. So you could have expected the market to come all the way to this optimum trade entry zones over here. Or you can see there is order block level here. You could have expected the market to come here as well. So you could have entered multiple trade opportunities. You can see there is a fair value gap here as well. So what I expected, the market might come here, but it's fine, guys. You can see this kind of rejection candles from 21 moving average clearly showing some sort of support. And the breaker block levels over here, you can see this is the large down candle. So what you could have done is to plot this candle over here. So the market taking support over here and continuing further bullish. So in case if you try to plot the fib extinction levels of this swing momentum, the common point between this to the common point between this to the common point between this. So what you could have targeted, you can see the 3.6 level over here or the 0.38 level, which I've already marked you previously, guys. The price came exactly. Or in case if you might not consider the 0.38 level, what you could have considered is the order block level, guys. This is the last up candle where I have entered my trade, short trade over here, guys. So this is the last up candle. So you could consider that to be a liquidity zone. So a clear 5-minute order block. So this was one opportunity where you could have taken long position, keeping your stop loss just below that candle itself and targeting all the way towards the upside. Or in case if you might have missed out on this opportunity, guys, what you could have seen here is clearly the market broke structure towards the upside, a clear break of structure. And you can see there is fair value gap between these zones over here, the three candle structures over here. If you zoom in and see, the market failed to close above this level over here, or the market mitigating this order block is the fair value gap over here, or what you can see the rejection candle over here. Clearly, this is another 1-minute order block, 5-minute order block. This is a 5-minute order block. So you can see the market rejected, and once this candle which broke towards the upside with a proper confirmation. So if you consider this swing momentum, the common point between this to the common point between this, once this 0.5 levels been broken towards the upside, this is where you could have taken long position, keeping your stop loss. This is with confirmation, I'm telling, guys. You could have either taken your position here, you could have taken your position here, you could have either with better confirmation, you could have taken this position here. You can see the market here broke the 200 moving average, the daily gap level above the 9 as well as the 21 moving average. clearly indicating bullishness, and you could have targeted this liquidity over here, and you could have targeted this liquidity over here as well. And these are all failure swings, so you could expect the major levels over here. So could have just hold it on to your trade, guys, and you could have targeted it all the way to this 5-minute order block level. You can see. I think patience and waiting for a correct opportunity to take the trades, and think this kind of consolidation where market rejecting, you could have either entered another long position. I think with a lot of confluence, guys, you can definitely make a better decisions in trading. And you can see the market came this to this order block level and clearly broke structure towards the downside here. Another break of structure, guys. Or you can consider a chalk formation over here. And if you consider this swing momentum, the last up candle before it broke structure towards the downside, and there is no fair value gaps here. You can see in a 5-minute time frame, there is no fair value gap here. The only fair value gap was here, guys. You can see this was the only fair value gap. And if you try to plot the fib levels over here, the high of this candle to the low of this candle, you can see this aligns with the 550 levels over here. This is the 550 level, which is in alignment with the fair value gap in here in a higher time frame. So this fair value gap along with this 50 levels is where you could have taken another short position, keeping your stop loss just above the day VWAP level. So let's try to plot this day VWAP level here. So if you try to plot the fib extinction lines, the common point between the high of this candle to the low of this candle to the high of this candle. So you could have targeted all the way to 100%, or you can see the 1.68 level, or you can see that there is the 200 moving average over here where you could have targeted like 100% or the 1.68 level. Definitely the market sentiment was bearish. So this is how you could have traded this all the way to 1.68 level towards the downside. So there is high probability the market might continue bearish. Or you can see this bullish momentum over here, guys. The market retracing here. And clearly the market here broke structure towards the upside. So let me even mention to you how the market here. So you can see a clear chalk formation over here. So what you can see is that in a high time frame, like let's consider 50-minute, the market rejected and moved all the way to this level. So if you consider the low of this candle to high of this candle, you can see the market came all the way to this optimum trade entry zone over here, where price rejecting from this optimum trade entry. So I'll be plotting it. And so if you consider this swing momentum, these are all failure swings, guys. So definitely in case if the market sentiment would go towards the upside, there is high chance the market might continue. So what I'm explaining to you is that let me take a position here and I will be holding on to my position, guys. So let's try to plot the anchor way up level over here. So what you can see here, I'll only provide you the best entry opportunities, guys. So long position here, guys, keeping your stop loss just below this candle itself. I'm asking you for just one candle of stop loss. And what you can target is if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this. So definitely I'm targeting it all the way towards the upside. So you can see the 4.26 level, guys, with a one candle of stop loss. So I'll be keeping this position in case the trade fails, guys, or even the trade wins in my position. You can just trial your stop losses, right? So I'm targeting it all the way to this swing above here, guys. A small stop loss and targeting it all the way. You can see this risk to reward ratio 1 is to 19, guys, almost like 20, if you guess me. So see if I try to plot here, it's like 1 is to 20, 32, guys. Or let me keep it here, guys, better. You can expect another bearish momentum and continue further. So let's keep a wider stop loss. There is no issue with that, guys. But my sentiment is bullish, so there is a very good opportunity. The market might continue further bullish, even after this kind of bearish momentum also. So let's wait and watch, guys. So this is about my trade analysis. You can see in Friday, which I've already mentioned to you, this trade analysis over here. You can see you could have taken this short position over here in my live trade only. I've told you when the market was explaining this video, when I was trying to explain this video, this is where I told you to take short position. In case if you might have taken short position here, you can see you could have easily targeted it all the way to these levels. But I'm asking you to take long position over here, guys. So in a daily time frame analysis, let's look and watch. You can see the market rejecting from lower levels, so you can expect some kind of bullish momentum, guys. So definitely based upon risk to reward ratio is what I'm just explaining to you. So long position here, keeping your stop loss below this candle. That's it. So I hope you're understanding, guys. In case if you find my videos helpful, please like, share, and comment. Share with your friends and family as well, guys, and keep supporting my YouTube channel. Thank you, guys.